Ended up that, and then I shorted again to try and take this low out. And long story short, it came back on me. So I've ended up in about a break-even day. Really frustrating, really, because we were a little bit up. We're about 1 hour up, 2 hour up, something like that. About this point, only trading kind of 0.25% on this current challenge that I'm doing, and all in all, we ended up in a small loss. And it looks like we might actually be getting the sell-off now, really, because we've taken out the liquidity here, and now we're selling off, which looks like pretty decent. I might pop on a couple there. So we have a nice little bearish break. Just put on a couple there, and let's see how that one plays out. 2396. So gold, I'm really enjoying gold at the moment. It's responding really well to the trading strategy, which is great. I actually made more last week on gold than I did on Euro USD. So if you're not trading gold, Anton, I'm pretty sure you're primarily gold, is that right?
Yeah, it's all I trade, nothing else.
You love it?
Yeah, I love it. It moves really nice. It's my own flaws that let me down, but the pair is lovely,
Yeah, it did. Yeah, and I couldn't agree with you more. It just seems to kind of, whereas we've had, let me just move you guys out of the way. Whereas we've had kind of Euro USD, I mean Euro USD to be fair was quite decent today. But where in days where I struggle to find entries on Euro USD, I find gold just kind of moves pretty much all the time, doesn't it? It's always kind of moving. It's always kind of doing what it needs to do. It seems to respect the liquidity levels quite well. So if you're not trading it already and you're not quite happy with the results, I definitely recommend you guys playing around with some gold trades, because it is pretty decent. You can see now we're in this bearish range. We've tagged into premium. We've had a nice breakdown there. So expectation is for it to keep pushing lower. So let's see what happens from there. Anyway, that's not what we came to talk about today. So there's a couple of things I want to talk about today. So I've had this question a few times now, and I think it's a really important one to discuss. So pretty much everyone in here works full time, right?
Mm-hmm.
Yeah. Okay. So there's a couple of things that I will always do when I go to market. Let me just load up a blank chart. Whenever I go to market, this is kind of my daily process, and I think this is a really important one for you guys to kind of learn. So the first thing that I'll always do is I'll keep an eye on kind of any recent liquidity grabs. So we've got that weekly level there, okay, which indicates to us that we're probably going to be going, a bearish from here if we get a bearish setup. I'm doing this as soon as I get up. So if you work a classic kind of 9 to 5, and I'm just, I can't accommodate for everyone's schedules, but let's just say you work a classic 9 to 5. What I would be doing personally, what I do personally, is I get up, 5 o'clock, I'm at the gym most days, so I get up about 5 o'clock, I come into the markets, and this is my kind of process. So I'm looking at kind of any liquidity points that might be worth taking out, so I'm marking on my daily liquidity points that, might be worth taking out. If it's a Monday, I'm obviously going to look at what the weekly points are as well, so I'm going to mark those ones on first and foremost, because those are my two kind of key liquidities for the week that I'm probably going to be targeting. One of the things, and I'm building you guys some stats on this at the moment, one of the things that I've noticed quite often now, and again it's just a really nice simple filter, is if you go back in the charts and you look at just pure bullish versus bearish candles, can anyone tell me what the pattern is that we normally see? What if you get a bearish candle, what do you normally get afterwards?
And it depends on what's come before it. If you've had one bearish, or if you've had two or
just
three.
Literally a single. If you've got a single bearish candle, what normally happens after that on the next day? Another bearish candle, and vice versa. If you get a bullish candle, what usually happens is you get another bullish candle. I'm going to work out the actual numbers on this. I'm just going through some testing on it at the moment, but just a really simple filter that I've seen recently is actually if you look at the previous day's candle, the likelihood of it continuing in the same direction is actually quite high. I think it's split around 60-70%. So I think 60-70% of the time, and what I'm doing literally at the moment is I'm going, right, that's a bearish candle, what's the next one? Bearish. Okay, so I've got bearish. Then I'm going, that's a bearish candle, what's the next candle? Bullish. So I'm bearish. And I'm working out, I'm just going to test it. I'm going to try and get 400 candles and just working out what the split is. I think we're going to be quite pleasantly surprised. So that's just another quick filter that I'm looking at every single day now. I'm looking at what was the previous candle, well, the previous candle candle was bearish, so the likelihood of it being bearish again, you know, is quite high. So again, it just gives you a bit of extra kind of confidence for your direction, you know, alongside all of the other things that we're looking at. Okay, so the first thing that I'm doing every day is I'm marking on my key excuse me, liquidity areas. If we're obviously on the weekly, if it's start of the week, I'm putting on my weekly open as well. And of course, if it's the daily, if it's not the, sorry, if it's not Monday, I'm marking on my daily opens. So that's kind of my ritual and my process every single day. All I'm then doing is I'm dropping down to my 15-minute time frame, and I'm just looking at the trading ranges that I want to be looking at. So for example, I didn't take this trade, but today I drew on, I'll show you on my Euro USD. I've deleted it now. Where's it gone? There's that, the Euro USD. So I drew onto my chart so imagine we were here. I drew onto the chart my most recent range, okay? Because in an ideal scenario, especially at the start of the week, and this kind of moves on to one of the points I had a little bit later on. No, this is actually the next point I'm going to come on to. We know through the weekly cycle, what do we normally get on a Monday?
Accumulation.
We usually get an accumulation, which means slow, kind of consolidating price, not expecting any particularly big moves. One of the things I've noticed, and I'll go back and I'll try and show you, one of the things that I've noticed every single week, that's week, Monday, okay? One of the things I've noticed, so imagine that's the Monday from here, okay? This is our trading range from that high to that low, okay? One of the things I've noticed is that actually what happens is the market will seek external liquidity before it does anything of significance, okay? So one of the things I want you to start looking at and testing when you're doing your testing and you're going through the markets is not taking any trades until an external liquidity point has been taken. Because what happens when we take an external liquidity point? What gets injected into the marketplace?
Well, you do your liquidity injection, and then you typically look waiting for the reaction.
Exactly. So you get a liquidity injection, okay? It then brings in volumes of orders, and then it can set you up into some nice trades. So, you know, here, admittedly, last Monday was a very bullish Monday, but it took out that external liquidity. You can see in this section, there wasn't really a setup. It didn't really take any liquidity of significance. It took out, you know, a little bit of internal liquidity there, which, you know, is all well and good. But ultimately, it didn't even take that kind of interim low of Asia, and it certainly didn't take that low of Asia. But what happens when it takes out the external liquidity? We get then some really nice ranging motion. And, you know, I'm sure if we look at that a little bit closer, we've probably got, we've got a complex reversal there. So we've got our initial push down, okay, we've got our trap sweep, we've then got our true breaker structure, retest, and a sell-off, okay. Let's just set our replay tool. Sorry, the zoom, it always get in the way. Right, let's move that over there. So if we set our select bar down to here, let's just drop down to the 1 minute time frame, okay? What we've then got here, as you can see, is we've got a really quite lovely complex reversal. So we've got our trap there, okay? Let's look at 3 minutes, probably a little bit clearer. Yeah, so we've got a trap there. We've then had massive MSU, okay? And you could have taken it off that manipulation. That's our MSU there. Take that off the manipulation, engulfing somewhere around here, wherever it might be. Stop above the high, and then you can obviously sell off down into it. That move only occurred once it took out that external liquidity, and you know, you could have got yourself a nice trade out of that, okay? So it's a really good filter, and again, I'll go back and I'll show you a few other examples, okay? Let's go back to some other Mondays. So Monday here, okay, so this is the Monday start of the week. Okay, let's just say probably from here, if we include that Newswick, that's our liquidity, okay? Look what happens as soon as it takes out an external liquidity, big injection of liquidity, again, another complex reversal. We've had our trap taken out there. You can see without me even zooming in, you've got an MSU set up there. You could have taken that trade and you could have sold off down to wherever you wanted to, and you would have made yourself a really nice profit, okay? Let's go back to the previous week as well. So where are we? Monday here, okay? So this is our trading range we're in at the moment, okay? nothing. As soon as we take out that external liquidity point, and in fact, as you can see here, we're actually getting some really nice setups here. You know, we're getting some really nice setups here on Mondays, which, you know, is quite unusual. I don't really trade Mondays that often, but we're getting some really nice setups, exactly the same. So you've got your trap here, you've got your false breaker structure here, you've got your true breaker structure there, okay, and you could have got in on that MSU setup there, because once we've invalidated that trap, remember, we can then just on a complex reversal, so we're looking for initial reaction, so false breaker structure, invalidation of the trap, and then as soon as that trap's been invalidated at a key liquidity area, which in this case is that external point, we can just get in off the back of that. So you know, those of you who are eager to trade on a Monday, and that's exactly why I took the gold trade this morning, because we had exactly that. We were in a bearish range, we took out the external liquidity, didn't get the move like this, or like we did on this EU pair, but as you can see, once we take out that external liquidity, you know, it gives us, you know, a really nice setup. So if you're looking to trade sooner rather than later, my advice to you would be is to wait for that external liquidity to be swept. That will usually then inject liquidity into the marketplace. Okay, this one, for example, here, this one we don't get a setup, as you can see, but as soon as we then blow through that, we then start getting some really decent movement here. There's no opportunity to get into there. You'd be absolutely gambling to buy that position. Let's go back further if we can. Let's go to the 5 minutes so we can get a few more bars. Okay, so I want you guys to kind of play around with this. So let's have a look at this one. So our trading range as of Monday, depends on where you pull it from. You could pull it from here to here. There's an argument to say, no, sorry, apologies. So that's Monday. So you definitely would pull it from there to there, because that's our trading range. Okay, we blow out that trading range, and then, you know, you don't really get a setup, but, you know, you might have been able to get a sell-off from here, from the retest of the range potentially. But look, what I would suggest is start drawing on the most recent range at the start of the week, and just hold fire on trading. I saw some examples earlier. I'm trying to find you one. Saw some examples earlier where we didn't actually get a sweep over the external range until we'd like come into like Tuesday. So that's our higher time frame range there. We've got this internal range. This one, obviously, it stays put. Again, once we've swept liquidity, we then start getting some decent movements, and then we can start looking into some trades. So whilst you're in this little section here, I'd be really nervous about taking any trades. Similarly, in this section here, you can see, you know, we don't really do much when we sweep that external. Once we've blown that one, big injection of liquidity, then we get some bigger moves, and then you can start trading. So that's one of the filters that I've started adding to my my trading, because I quite like the movements of Mondays. Have any of you had much success with Mondays lately? Has anyone noticed the difference since the contract change? No? Does anyone just trade Monday like normal? Yeah? Does gold kind of just trade pretty much normally on Mondays, does it? It's still relatively new to me, I'll be honest.
Yeah, it's nothing unusual.
No.
I've noticed on Monday. It seems to trade pretty much the same all week, Tim.
Nice. Well, look, I think it's a really good filter to start including, okay? So going back to my daily setup, so working alongside a full-time job, what I'm then doing when, you know, and this is every single day, is, you know, I'm looking for trades from my ranges. More and more so these days, just because I'm busy with various other things, I'm kind of waiting more for external liquidities to be swept before I'm taking any trades. So what I'm doing on Monday morning is I'm marking out my external liquidity points, like that to that. And then I'm just setting alerts on them. So I'm setting alerts here, I'm setting alerts here. And then I can then go about my day and don't really have to worry about the markets until I get a setup. So we get that sweep of that liquidity up here, okay? Price doesn't really do anything. You could argue that's a false breaker structure, which then gives us a trap, okay? And then you've got this big, massive, it's probably a 5-minute MSU. You've got this big, massive MSU up here, okay? And so you could have got in on that trade on the engulfing, okay? And then what you then do, and you know, because I hear this a lot of the time, is people keep saying to me, well, I'm struggling to get to the markets, or I'm struggling to spend as much time on the markets as I would like to. Well, what you can then do when these things happen is you can just look at the markets when your alerts get set. So let's say that alert gets triggered, okay? our price is here. That alert gets triggered and you're like, right, okay, so now I know it's Monday, I'm going to probably be trading a little bit cautiously. I'm not going to look at this marketplace until I'm certainly not just going to buy that, okay, because we swept it once. Sorry, actually, it would be a little bit further back, wouldn't we? Yeah, it would be here. Okay, so I'm not just going to buy that straight away. That's too high risk of a profile for me. You know, yes, we've had a nice rejection, but that to me is a little bit too much of a risk. What I'm then going to do is think, right, when am I going to be interested in this trade? Well, I'll be interested in this trade if we then sweep that high of that 5-minute range. Okay, that's the range that we're setting. Okay, so there's two things that I can do here. The first is if price comes up like this and gives me a nice pattern down here, okay, I can take that trade. So I'm then just go back to work or go about my day. We don't get any sweep, of course. You might want to set an alert below here as well, because I always like to set a kind of a high alert and a low alert to kind of indicate to me what we're going to do. So I'm then going about my day. I look at my charts. I'll spend a couple of minutes thinking about where I'd want to go next, and then I'm going to set 2 alerts, one above and one below. When that gets triggered, okay, that's got triggered. I then can go back to the marketplace, and then I can start looking for a setup if I get one. Okay, do I get an MSU? No, I don't get an MSU setup, but now I'm in this new kind of 5-minute range. Okay, this is ultimately where I want to be looking for trades from. I'm going to do exactly the same. I'm going to bring my alert down here. I'm going to bring this alert down here. Okay, so when either one of these gets triggered, I'm then going to start looking into trades potentially. Okay, so I've got that alert now, it's been triggered. So now I'm looking at this thinking, right, now this is maybe a little bit more promising for me. You know, I can see now I've had, you know, a false break of structure. You know, it's not created any new highs. We've actually got equal highs there. So possibly now we can start looking for bullish setups, waiting for it to come down. And then when we get that MSU pattern, which we do here, we can then start looking into trades, okay, and then, you know, holding up to say most recent highs. Probably going to trade a little bit safer because it's, you know, a Monday. I'm not expecting it to push as high, and that's how I'd be looking at my trading. So it really saves you sitting in the marketplaces all day long. The alerts are your best friend, which means unfortunately if you don't pay for the Pro Trading View version, I would highly recommend it, because I think if you are on just kind of the normal Trading View, you get like 1 alert, is it, or 2 alerts, whereas if you're on the first level of Pro, you get 10. For me, that's plenty. I don't need any more than 10 alerts. The other thing that I would strongly suggest as well, especially if you can't be, I'm pretty bad, so I'm pretty bad at watching my trades. I really like watching how price moves. I feel like, personally, the more time I spend watching price moving, the more attuned I am with price action and what price is likely to do. And I think that's something that it's one of those old sayings of, you know, to master something you need to spend 10,000 hours doing it. That's part of my 10,000 hours. So I quite like watching the trades. I'm able to watch my trades. If you're not able to do that, my suggestion would always be this. So you're going to set your replay tool, okay? You've taken the trade, and you've bought this marketplace because you've got your engulfing pattern there. Okay, so you've got into that trade like this. Okay, pretty wide stop on that one. You might argue that maybe a 7-pip stop is better than that one. You might take a slightly risky approach on this one because how wide the stop is. And then what I'm doing is I'm setting 2 alerts. My first alert is at that high, so once that high is breached, I'm then going to potentially consider removing my stop, and my second alert is for my stop, and it really is as simple as that. And then I go back to work. I can then start watching, crack on my day. When that alert gets set, I can then look at my charts again. So it means that you can condense a whole trading day down into maybe just kind of 30 minutes to an hour's worth of trading. So if you're one of those people who's kind of struggling trading with a full-time job, that's how you can day trade. Alerts are your best friend. Your morning analysis is really, really important. Can anyone else tell me what morning analysis does? How does it benefit you? How does it help you doing kind of your analysis in the morning?
Stops you impulse trading. It doesn't stop. It helps position you to reduce that, to do it less.
Absolutely, yeah. So how many times have you, and we're all guilty of this, myself included, I've made a couple of stupid errors today. How many times are you guilty of just coming into the marketplace and thinking, oh shit, we swept out that liquidity there, so that's definitely going to go bearish, and oh, do you know what, I've got a meeting in 5 minutes, so what I'm going to do is I'm going to do that. I'll put a safe stop there, but you know, with how this is quite bearish, and you know, we've got bearish structure, you know, ultimately I'm going to be, you know, I'm going to be pretty safe there, and then you get blown out, you get stopped out. The reason why that happens is because you haven't given yourself enough time to forecast and analyze. Okay, if you go into the marketplaces like that and you look at it and you think, do you know what, I'm just going to take a trade based upon feel, you haven't then accounted for the fact that actually what's happened earlier in the day is we've swept external liquidity. So the likelihood is now is that we're going to be pushing higher. We are in this bullish range anyway. We have actually had a higher time frame complex reversal here. So we've got false breaker structure. Sorry, wrong one. False breaker structure. We've had our trap that's been blown. We've then had our true breaker structure. Okay, there. So the likelihood is, right, is that this is going to be a bullish marketplace now, because we've got all of those working elements that we want to indicate that we are, you know, we're going to go bullish now. But so many times I've made this mistake where I haven't done my morning analysis, and you know, it happens even sometimes if I've got a really busy day at work. I'll end up going into work, I won't have time to do a morning analysis, I've got up late for the gym, I've got to leave, or whatever it may be, and then I take trades like that because they look like they probably would do that, and then you miss out the kind of the higher time frame narrative. So it's really important to do that morning analysis. Frame up your range, frame up the areas that you want to be taking trades from, mark on your daily opens, set things like your external liquidity points and make sure they're marked up properly. And then, you know, when you do come back to the marketplace here, let's say, you know, you missed your alert that was on that external liquidity point, but then you came in here and you thought, you know what, I'm going to start looking for a trade. You're probably going to make a better decision, right? You're probably going to look at that and think, do you know what? It looks like I've probably missed the boat, or if I am going to trade, I probably need to trade up to that external liquidity level. So hopefully that will help you guys if you are working full time, just kind of plan your days a little bit better. Were you guys kind of doing that sort of stuff already? Is that new to you? Is this kind of, you know, stuff you were doing already?
I just become lazy with it.
So what would you say your daily processes at the moment?
Well, I've actually gone back to marking my charts up, but prior to like...
Sorry, I couldn't understand. That was just far too northern. Do it again.
Yeah, so the past couple of weeks, or maybe the past month, I just get up, look at the charts, and if I like something, take the trade.
Do you? Okay.
Feel, basically.
And have you found that your results have been better or worse?
By far worse.
Yeah. Okay, so start implementing this process. So almost, you know, what you might want to do is you might want to run, and maybe I'll put this together tomorrow. You might want to do like a checklist every single day. In fact, I will. I'll put it together and I'll put it in like the resources section, and I'll put it part of our kind of daily process, because I think it's really important that we all follow it. Is every single day we want to do. Mondays will be slightly different, so there'll be a little bit more to do on Mondays, but Tuesday, Wednesday, Thursday, Friday, we want to be looking at things like previous days, highs and lows, the current trading range that we're in, the liquidity points we want to be looking for trades from. And that, I think that number 4, I think that's probably the most important one out of all of them. The liquidity points you want to be looking for trades from will stop you from taking stupid trades, okay? They'll stop you from seeing that New York trap got blown and therefore you want to be taking a sell, because the higher time frame narrative is that this is probably going to be a bullish marketplace. So that should hopefully really help. I'll put together that checklist, but you might have slightly different checklist points that you want to do. The other thing that you want to start looking out for as well when we come to kind of later in the week is you want to start framing up your AMDs as well. So your weekly cycles. Is this a live? No, this is my proper chart. Let me just. So what you probably want to be doing. Is that right? No. It's not my normal Euro USD, is it? No, it's not. 2 seconds, guys. So what you would probably want to be doing, right? Okay, is. Oh shit! Took off all my indicators. Right. Is when you get to kind of Tuesday, Wednesday. Now, one of the most difficult things with the weekly cycle is it can be really difficult to understand where the weekly cycle is before it's happened. It's not always picture perfect. Like, well, I mean, even on the daily there, that's a really good example. If that's our accumulation, okay, we assume then that this is our manipulation, okay, and therefore we assume that this is our distribution, okay. But actually, as you can see in hindsight, what's happened is the accumulation was here, okay. It can be, and you probably noticed this now, it can be double manipulated. Can anyone tell me why they think it's manipulated twice? Can anyone tell me why they think that happens? So why do we sometimes get this accumulation, manipulation, main manipulation, then distribution?
Because typically, if you've got accumulation that's built up a range, you're going to have stops by SPY and sell side liquidity sitting above both.
Yep, absolutely right.
We'll take that, and then we'll go.
Yeah, and remember as well, the cycle, so the AMD cycle, it applies to not just daily and weekly, right? It applies to hourly. It applies to 4 hourly. Okay, so, you know, this is something that you want to bear in mind, is that although that's our daily cycle, what's going on here is we have another accumulation on a lower time frame. Let's move that out of the way so you can see it a little bit clearer. You've then got a much smaller manipulation on a lower time frame, and then you have a much smaller distribution on a lower time frame. So AMD applies to all time frames, remember. Now we only look at it really as a daily and a weekly, but the reason why it can sometimes happen twice, or seemingly happen twice, is because within that little section of price, which is from, let's say it's from here to here for argument's sake, that's a 6 hour candle, or maybe even an 8 hour candle. Yeah, because we've got the end of play reversal. So that, if I go to set the replay here, okay, get rid of that. Okay, what I'm looking for is a 8 hour. Okay, that little cycle there is that. So open, low, high, close, yeah? Okay. So then when we drop down to the 15-minute time frame, okay, hasn't really worked on that candle, so the candle's not in the right place. But look, I'm sure you probably get the gist, okay? Accumulation, manipulation, distribution, okay? So it happens everywhere, okay? And that's just something to be really, really conscious of. Really small. There we go. Okay, something to be really conscious of. So when you're looking for these weekly cycles, okay, the difficulty that sometimes we have is kind of working out where the AMD is. So if we go back, let's try and find a nice clean week. So Friday, Monday, so Monday here, that's a nice clean week to be fair. So we've got our accumulation here, okay, like that. That's Monday's accumulation. And as you probably worked out, it's never perfect. Okay, that's our manipulation. And then of course we've got our big old distribution going into Thursday, and then Friday, and then end of play reversal, which goes over Sunday, okay? So it's never perfect like that. It's really difficult, therefore, to kind of assess where you should and shouldn't be trading from, and, you know, what is accumulation, what is manipulation. It's often, you can only really tell it, you know, once it's happened. So Tuesday, Wednesday time, I am looking for an area which is a possible low or high of the week. This one is, you know, it's not very clear because the manipulation wasn't particularly great. But then when we start making bullish price action through Wednesday, and we know we're bullish, we can then probably assume that that is the accumulation, that is the manipulation, and therefore you get a really nice bias to show us a distribution up here, and you could have traded that really, really nicely. To go alongside that as well, one of the things that I think we kind of missing quite a lot is, because Thursday and Friday are often just continuation days, you'll notice more often that they won't actually retest Asia. So it has done there, but it hasn't done there. Let's go back to Thursday, Friday here. See, Thursday doesn't actually retest Asia. Friday again doesn't retest Asia. So one of the things I've noticed recently, just through kind of classic price action, that Thursday, no sweep of Asia, Friday, no sweep of Asia, but it has just continued up bullish. Opposed to the other days of the week, like Tuesday, clear sweep of Asia, Wednesday, clear sweep of Asia, Tuesday, clear sweep of Asia, Monday, clear sweep of Asia. So Monday, Tuesday, and Wednesday, those are the best days to be looking for Asia sweeps. Okay, Monday, Tuesday, Wednesday, Asia sweeps are more prominent. They will happen more often. Again, I'm going to start. There's a few things recently that I've just kind of established through just being in the markets, just a few little tweaks that I want to kind of include in the 2024 course. So I'm going to put together some stats on them. I've got a big long list of things that I need to gather the data on, so I can show you the probability of these things happening. So I'm going through like the last 100 Mondays and seeing how often Asia gets swept, doing that the same for Tuesday, Wednesday, Thursday, Friday. I'm logging all the data for you so you can see that. So I'll have a bit more kind of information for you on this, but again, just go back and start looking at the charts. Monday, Tuesday, Wednesday, look for Asia sweeps. Thursday, Friday, just look for continuation trades. That is how I've kind of found the best way for me to make profits at the moment. So the other thing I want to talk to you about today was the MSU2. Has anyone watched my video on the MSU2 yet?
Yeah, I have.
Yeah. So I said before when we kind of originally did the original course back at the start of the year, I was going to find some refinements. I kind of pictured the course in kind of like two different phases. I wanted to build the course so that it was easily tradable by a educated trader who needed a bit of a deeper understanding. I feel like we've done that. I feel like we've done a really good job with that. But I was talking to a trader that I'm quite friendly with, who also trades MSU, and he just kept getting tighter and tighter entries for me. And I just asked him, "So what are you doing differently? Why are you entering like this?" He said, basically, once I know all of my other confluences are in tow, so let's just, hopefully we've got one here. Let's say we've swept out Asia there, okay? Let's go to our replay tool, go back here. Let's see if we get an issue on this one. Once I know that all of my other confluences are in tow, what I've stopped doing is I've stopped waiting for the engulfing. So whereas most of us, right, so that's our ISC there. I'm not going to include that bit because it's shit price action. Okay, that's our ISC there. Okay, and we would then therefore class our MSU as that sweep. Okay, it's not a great example because the entry is about the same. Let's say you got in a little bit later. Okay, most of us are entering like that, right? And they put the stop above the high, and then they hold down and they get there, whatever it is. Okay, great trade, happy with that, 5R. Okay, what he's started doing is he just waits for the manipulation, and he doesn't actually wait for the rejection, because the rejection, so the engulfing pattern, why do we use that? Why do we use the engulfing pattern?
Shows us momentum in one direction.
Yeah, it's just an added confluence, really, isn't it? It's just, it tells us that price is going this way and not going that way, right? He basically said that as long as all your other elements are in place, you don't actually need to wait for the engulfing. You can just take it off that wick. So you can just take it like that, and then you can hold down. Now, he trades a very high risk version of it that I don't agree with, and I'll talk you through that in just a moment. Sam, you're going to love it, okay? But what he does is, whereas I'm getting 5R out of the trade, he's now getting 12R out of the trade, or 11R out of the trade, because he's not waiting for that engulfing. He's got all the elements that he needs. He knows that it's going to go bearish from here, and therefore he just holds the trade down, okay, until his profit target is reached. And so he's getting twice, and he's done giving me some of the stats on it. He's able to double his profits and therefore get his first profit target out quicker, and he's getting his final profit target at a much greater rate. So let's say he's going for the same 2R that most of us are doing. He's getting out here after like 3 candles, whereas I'm having to wait till like here, which obviously is increasing your win rate. So again, I haven't got the data on it yet. I'm testing at the moment. But if you guys are really confident on your trade, try just waiting for the manipulation and then entering once the MSU pattern has been manipulated, regardless of waiting for the engulfing pattern. And you know what, funny enough, the guy that I learned the MSU pattern off, I've been watching some of his Instagram lately, and he, I think, does exactly the same. Even though he teaches it with an engulfing, he does it exactly the same, where it looks like he's just waiting for that first trade to occur. So you know, I think it makes the setup more profitable. Obviously it's gonna make your losses greater, okay, because there are going to be times where it just continues. But you know, I've noticed recently that actually once I've got everything else in line, external liquidity, you know, I've got my ISC, I've got imbalance, I've got, you know, momentum on my side, that the engulfing pattern normally always comes anyway. One of the things that this other trader does that I don't like, and he says that basically a couple of the times he will take kind of 2 or 3 losses, is he will take his stop just above the wick. So he'll wait for the manipulation and then he'll put his stop just above the wick. I don't like that personally, but you know what, if you can get yourself into 17R trades and you're dropping 2 or 3 losses, if you've got the mental game for that, personally I don't. Personally I need to win more than I lose. But that might be, again, something you want to play around with. So there's going to be a few updates to the strategy coming soon. I'm going to put some videos together on it. Again, as I do with everything, I'm not going to kind of put something glossy together for you guys until I've thoroughly tested it myself. So it's going to take me a little while to do that. But if you want to play around with it, see how you get on with it, and go from there, really. Pete, on your EA stuff, do you use a manipulation setup entry?
It's on one of the strategies I'm testing at the minute, yes. On some of the others, it's more basic in terms of playing off ATR, using the ATX, using Bollinger Extremes, so using some of the other indicators through MT4 in terms of the input settings that it gives on the strategy tester. So it's slightly different. But what I'm looking at more now is a really specific liquidity sweep concept, which is, I'm not ICT, I've not done ICT, I've not done any of that, so this may well be something that's covered in there, but it is around the New York Open times, which is looking essentially at from UK time 2:30 p.m. If this comes down to having not as much time to be on the charts, is looking at the liquidity that's created just before New York Open, pretty much on the 5-minute. So what is the key high and low of liquidity? Wait for that to get swept and rejected, and immediately enter down to the alternative liquidity. So if it's swept the buy side liquidity, wait for the reversal candle on the 1 minute, and then trade that down to the sell side liquidity.
Oh, nice. How's that working out?
So I've tested that for every single day over the last sort of 6 weeks for every opening. Some days have better than others, but it's got I'll confirm in the numbers on the Discord channel in due course, but it's got a very, very, very high win rate.
Really?
What I'm trying to work out is just the discrepancies of when it doesn't win. Why? Was that my placement of which liquidity I played it off when there was other stronger liquidity sitting above it, or that? Okay. So, but it is all around manipulation, sort of people liquidity, like the key liquidity points, manipulation, and then playing it down. So it's kind of your what you've put into the course and what you've kind of, I guess, taught us is you start to see it everywhere. And then it's like, okay, well, how do I probably doing what I should be doing, which is not focusing and saying, like, taking that one thing and just repeat. And when you start to see that sort of liquidity everywhere, you say, well, if it takes that, then it should go here, or it could go here. And you start potentially over trading.
Really interesting. Really interesting. I'm excited to see how that plays out, because I mean, if you can automate, you know, the thing that's sort of difficulty is working out where the key liquidity pools are, really, aren't they? I think that it sounds like ICT's silver bullet strategy.
I've not. I probably should know that, but I've not come across that. But like, I'll look it up and
have a look at it. ICT Silver's bullet. I think that is exactly that setup where
New York
opens. They frame the high and the low of the range, and then they wait for a sweep and a displacement, so a rejection with imbalance, and then they target, I believe, the opposing liquidity. So I think that is. Have a look at the ICT silver bullet. Casper and Faiz, Faiz, they're both ICT YouTubers. They both have videos on the silver bullet strategy. Have a look at them. I'll be interested to know if they're similar. I think they are.
Yeah, it sounds very similar. Actually, I've not brought imbalance into it, but I guess it sounds pretty much exactly the same thing.
Can you program that in? Can you program imbalance into these EAs? Can you?
Not easy. The MT4, to be honest, when you draw it back to its base level, is pretty basic in its inputs of what strategies you can apply.
Okay.
Then not. It's like RSI, Bollinger's, ATX, those sorts of things.
Okay.
And then so you can't do this type of thing. So this is where I kind of want to get to the next step, but I don't think I can do it on MT4, MT5.
Exciting. So we are. Where are we? So okay. So the final thing I want to discuss today, and this has kind of rounded off our hour really nicely, is for anybody who feels like they're struggling at the moment. I'm going to use the analogy that I always use, but I think it's a really important analogy, okay? If you were playing golf or learning to play golf, you're not going to buy the most expensive golf rackets and go to I don't play golf unless you can tell, and go to the most expensive golf pitches and hit the most expensive golf balls on the most expensive. You know what I'm saying, right? You're not going to go down to St Andrews and put yourself on for an 18-hole golf game and do that when you're first starting. The first thing you're going to do is you're going to go to the driving range and you're going to learn over time how to hit a ball straight. Then you might go to like pitch and putt, and then you're going to learn how to get the ball into the hole from the tee. And I probably should think of a better analogy that I actually understand, but you get what I'm saying, right? Okay, you learn the basics first in any skill that you do. Okay, you start going to the gym, you're not going to start going in there and start clean and jerking 80 kilos off the floor. You're going to go in and you're going to start maybe learning how to deadlift for proper form, probably with an empty bar, and then you're going to start putting some light weights on. And as your strength and your skill develops, you develop in whatever it is of your chosen hobby, or in this case a career. And I think part of the mistake that a lot of us traders are making at the moment is we're not mastering the basics. So for anybody, those of you who are watching this live, or if you're watching this back on the recording, anybody who is going for 3 to 5 to 10 hour trades and finding that you're losing more than you're winning, and you are not at a win rate which is making you profitable, I'm going to ask you and implore you, and I'm going to put this all together in a new trading plan to stop what you're doing, okay? I ran some numbers on this the other day, and it was really, really interesting, okay? What you need to be aiming for, and what you need to be mastering, okay, is 1R trades. That's not what I want. I don't want that at all, okay? 1R trades. 1R trades. Because if you can win at a 60% strike rate, win rate, okay, you're going to find that overall you're going to have 6R of wins. So out of every 10 trades, you can have 6R of wins. You're going to have 4R of losses, and you're going to finish the week on 2R, which if you're trading at 1% per trade, you're making yourself 2% every week, or probably every 2 weeks, because 10 trades in a week is probably quite a lot. But then you might get more setups if you're only going for 1R, okay? Now what I'm seeing a lot of lately, okay, is people going for like 5R trades. But the problem with this is they're only getting like a 20% win rate, which means they're winning 10R every week, but they're losing 8R, and overall they're ending up in about the same, but they've taken 8 losses. And the problem is that your psychology and your mental game goes completely out the window. Because if you can handle doing 8 losses in a row, potentially sometimes more, because you might have a losing streak, you might lose 12 in a row before you get a few winners. If you can handle that, then you are making profit. I would argue that seems like a lot more stress, right? Taking 10 trades, losing 8 of them and only winning 2 of them seems like a lot more stress than if that. Now, if you get good at this, you can probably increase this to like 70 or 80%. Even if you get that to 70%, you're still winning 7, you're losing 3. You've now then doubled your... Hang on. My brain... Yeah, it is. Sorry, my brain had a little fart then. Okay. You are then still doubling, okay, your win rate. Whereas realistically, this is probably going to stay very, very similar. Now...
Jack, can I just jump in?
Of course you can.
So I've done some back testing for the last year on the EU. And it turns out that it's better to have wider stops.
Yeah.
For example, 7 pips to 14 pips.
Yeah.
It's fine. And you're aiming for 2R. You get more wins. The win rate is higher.
Yeah.
So if you were targeting, for example, 3R, you'd get a lot more losses.
Yeah.
Now, when you get those losses, say it's like 10 losses in a row.
Yeah.
You have to reduce your risk. So you can't bet 0.5% anymore.
Yeah.
You have to bet like 0.3 or something like that.
Yeah.
So it seems like you're making more R, but you have to reduce the risk to compensate. So what I found is better is up the risk to like 0.5%, 0.6%, 0.7%.
Yeah.
But just make that stop wider and just target 2R, because when EU moves, it moves about 60 pips on average. So that 60 pips, it could be 60 pips in one direction, or it could be 30 pips up and then 30 pips down.
Yeah.
So when you've got a 14 pip stop loss, it gives you 28 pips. So if you do 14 times 2, 28 pips. So that 28 pips covers your 30 pips up, and just in case it reverses on you, you still made your 2R. So when I've done the numbers for the year, you make so much more just getting your 2R, but with a bigger risk.
Yeah.
Like you literally make 10% every month. Like the numbers are just crazy.
Yeah.
When I run. Yeah, so that's my advice.
And I think what we try and do, and this is difficulty where, because I will take kind of half of my risk out at 2, and then I'll hold for kind of 4 or 5. And I've noticed it myself, 20-30% of my trades will run to 4 or 5, but then 60-70% of them, 70-80% of them, they're running back to break even. So I'm actually only getting 1 R out of the trade. So one of the things I've been doing lately on my latest challenge, and it's working more successfully, is I'm taking most, if not all, of my profit out at like 1.5 or 2. Now I'm doing it a little bit differently. What I'm doing is I'm doing it based upon momentum. For example, if I'm in a trade like this, okay, and I've taken this short here, taken that short here, and my first profit target was there, for example, at like, maybe I've got in like that at like 1.3. See this again? See this little digit in the wrong place? Notice that? It keeps doing it. It's really annoying me. Okay, so that's, say I've got into like that. If it's moving really, really fast, so I'm not doing any like automatic TPs anymore, what I'm then doing is, if it's moving really, really fast, I wait for like a consolidation point, and that I'm finding is a really good way for me to kind of, why does it keep doing that? See that? So annoying. Go away. Yeah, and then what I'm finding is that sometimes I can maximize my wins. But let's say, using your theory, you got in like that with a wider stop, and therefore your first profit target was here, and it started mucking around about there. I would then take a lot more off. So if I'm trading like that and that, and it's moved really, really fast, I'll take like 50% off here, okay, and then I will hold a lot more. If, however, my first target is there, I'm taking like 80% off. So I'm doing a little bit more manual, but I think it's difficult when you're taught by somebody or anybody. Most people that are teaching and trading, they've been doing it for a very long time, so they're probably a little bit better at getting the bigger trades and holding the bigger positions. And I think what it does is it lures us into this false sense of security where we can kind of replicate the results, but unfortunately, like anything, it takes a lot of time to get those results. So I think if you're at a point where you're not winning as much as you want to, and I think, Frost, you've hit the nail on your head there, and maybe you're losing or you're constantly in drawdown, try this for me over the next week. We are going to catch up again in a week's time. I want you all to be available if you can. We will be able to do it on Sunday next week because I've got a free Sunday, which is great. So we'll be able to do it on Sunday. And what I'd really like to see is what your results have been. Okay. What I want you to do is I want you to go for 1.2. Okay. Because then even at a 50% win rate, and you should be, if you're using the strategy as I've outlined it for you, you should be getting more than a 50% win rate at 1R. It's as simple as that, okay? What I'm going to suggest is go for 1.2 and see where you are at the end of the week. Don't get greedy. Don't hold trades longer than you need to. I'm going to do exactly the same this week just to test that, and I'll show you my results as well. Just go for 1.2, get in and out of the marketplace, take your full TP, because if you can get 80% of your trades winning, okay, then you've probably had the best week you've ever had trading, with a lot less stress, with a lot less frustration, okay? Just make sure you follow the strategy, use your external liquidity points, wait for your MSU setups to come in, wait for the imbalance to come in, wait for that volume to come in, and then just aim for 1.2, okay? And I'll do the exact numbers for you, okay? So if you have taken 10 trades over the next week, okay, 1.2, you will end up with 9.6. Yep, and you'll be -1, which means overall you'll end up with 7.6R or 7.6% at 1% per trade, or 3.8. Yeah, 3.8% at 0.5% risk. Okay, and I reckon if you do that properly, you'll probably have the best week that you've had trading for a long time. Now, what I want to try and do is I want to try and get everyone in the mentorship to get to a point where they're winning like this consistently, master this, and then go from there, guys. Because look, if I could get rid of that for you completely and say this is all you need to do every single day in the marketplace, would you change it? Would you change it? If you could do 3.8% per week, would you change it? Would you try and go for 2, or would you try and go for 3?
It ain't broke, don't fix it.
Right? What's the point? Because 3.8% on $1 million, 38 grand a week, be pretty happy with that. Even if you're only doing half of those trades, if you're doing 5 trades a week, you're still doing 1.5, 1.9, you're doing 19 grand a week. I think we could all probably be pretty happy with 19 grand a week on $1 million worth of capital. And if you are doing that sort of, result every single week, you'll pass a prop firm challenge a month. Once you've mastered that, then you can then stack prop firm challenges. You can do a 200k FTMO and a 100k CTI and whoever else, and you can copy trade them all across, and you can just build your capital really quickly. So I want you guys to test that, okay, over this next week. And I want you to follow it religiously, and I'm really interested in seeing how your results come out, because I think you'll probably have the best weeks that you've had because you're not shooting too high. Sam, it is going to mean that you're going to have to put your stops above the highs, I'm afraid to say. Okay? Not going to be able to do that. But do you know what? Actually, in hindsight, your trade earlier on gold, you would have won, right?
Yeah, I would actually, yeah.
You would have won, right? And that's the difference. And that's the difference that I think a lot of us are missing, and at times myself we're missing, is that, you're aiming for these big profits because you're like, right, I want to get 4R off this, 5R off this, and then it comes back and reverses, you get stopped out, you get break even.
Yeah, check. I've seen a lot of times where if you got a tight stop loss, you'll lose, like, let's say 2 trades and you give up. Whereas if you had a wider stop, you win the trade and you take your 2R. Now, there's a huge difference between winning 2R and losing 2R. That's like a 4R difference.
Yeah, 100%.
So that 4R difference, when you accumulate that over the month, it's huge. You don't realize how massive it is. Yeah.
I've had days where I've been like in a profit of like 1R, for example, and I'll take a trade, it will lose, take me down to break even. I'll take another trade, it will lose, it'll take me down to -1, and I sit there thinking, I've actually just lost 2% here, whereas actually if I'd stayed where I was, I'd now be 1% up. I'm now 1% down. I've got 2% to recover now. So, it's something that I've been playing around with lately, just taking my profits out a little bit sooner, and it's really, really effective. I'm going to do it for the rest of the week. I'm going to go full TP at 1.2. I'm going to try and get like 100% win rate. That's my kind of focus for the rest of the week, from Tuesday to Friday. So from this point forward, Tuesday to Friday, any trades that you guys take, don't care what your stop loss is. If you want to go wider like Frost says, then obviously free to do so. I want you to take right trades. I want to take you 8 A grade trades, and I want you to get out at 1.2, 1.3. Okay, don't muck about with it much more than that. I would do a manual TP unless you can't be at the charts because you're at work or whatever it is, so that if it does rocket through and go up to 2R, you can take 2R and you get a nice little win. But if it gets there and starts mucking about, just take your profit out. Okay, set your alerts, take your profit out, use what we've talked about today to set your trading time, to set up your day every single week. I'll put together some literature on that for you tomorrow, and a bit of a kind of a checklist that we can start working through of how I think it should work. But this new trading plan, I think, is going to make us much more profitable than where we were taking 2R off at 50% and then holding the rest of the 50% at 4R. Because overall, when you come out of that trade, you're only at 3R anyway. So, you're not getting a huge extra win for that. So look, I think that'd be really, really good. Are you guys up for the challenge? Yeah. I'm really excited to see what we can do with it. All right, so I'm going to get this uploaded for everyone to see. Hopefully a few of the other guys can get involved. We'll set up a time on Sunday. For you guys, is the morning session okay for you? So would 8 a.m. say be too early, or 9 a.m. be too early? The reason why I ask is we've got a few Australian members now, so I'd like to get them involved every now and again.
Fine, mate.
Yeah?
Good.
Good? Thumbs up?
That's good.
Decent. Okay, cool. Right, well, look, that's us done for the day. You'll notice that we didn't get kicked off because I've stopped being such a skinflint. I've actually paid for Zoom.
Gone for pro.
Yeah, paid for Zoom. So we can spend a little bit longer on these sessions now. Gordon, you're in as well. Good to have you. Gordon, try and get a camera and a microphone sorted for next week as well, so we can get you on. I want to see your lovely face, all right? But other than that, we are all done for today, guys. Thank you very much. As always, any questions, any queries, please let me know. Let's see how our gold trade's getting on. Oh, not good. Uh-oh. Maybe another loss for the day. Let's see where we go. I'll keep you updated on that in the group. But yeah, guys, cheers. Lovely to see you. Catch you all soon.
Bye.
Cheers, chat.
Cheers. Bye-bye.